Welcome to XM.com. This is a Forex Preview. We'll be looking at the European Central Bank meeting, the last of the year, coming up on Thursday, and officials are expected to deliver another rate hike. I'm Cristina Marujos. With me today is our senior investment analyst, Geralambos Pissouros. Geralambos, Eurozone inflation seems to be cooling down, according to the November print at least, and investors are becoming optimistic the ECB will deliver a smaller 50 basis points hike this time. But could we rule out a larger 75 basis points hike?
Hello, Christina. To be honest, I cannot rule out another 75 basis points hike, and actually the market is not ruling it out either. According to market pricing, investors are currently assigning a 73% chance for a 50 basis points hike, with the remaining 27% pointing to 75 basis points, which means that not all participants believe that a slowdown is appropriate. What's more, according to a Reuters poll, 7 out of 60 economists surveyed also believe that a more aggressive action is warranted. Thus, 50 basis points hike may come as a disappointment to those expecting a bolder move. However, that doesn't necessarily mean that such a hike will dictate the market reaction. Given that it is the base case scenario, traders are likely to quickly turn their attention to the accompanying statement for clues and hints with regards to the bank's future course of action. Now, ahead of the November inflation data, ECB President Christine Lagarde said that inflation has not peaked, while Chief Economist Philip Lane more recently said that they will have to raise rates several more times, even if inflation is now close to its peak. Remarks which suggest that the statement at Lagarde's press conference may have a hawkish flavor. After all, headline inflation remains in double digits. Core inflation has yet to show signs of topping, while the headline PPI rate, despite slowing decently during last month, remains at unparalleled levels, around 30%. So surging producer prices could well be channeled into consumer prices in coming months, which doesn't allow room for complacency. On top of that, the S&P Global Composite PMI pointed to another month of contraction in November, but it rose instead of sliding like it was initially forecast. Yes, a recession in the euro area seems inevitable, and the ECB's forecasts may well confirm that, but the PMIs may have added to hopes that the wounds may not be as deep as feared a couple of months ago, thereby giving another reason to policymakers for signaling that this fight against inflation is not over yet.
And Geralambos, now let's look at the market reaction in the euro. How could the single currency perform on the ECB decision on Thursday, especially if officials appeared in their hawkish suit?
As I already mentioned, the 50 basis points hike could disappoint those expecting a bolder move, and thus the euro may slide initially. However, the slide may stay limited and short-lived, as a hawkish message and even a split council with some members favoring a larger hike could eventually prove supportive for the euro. For the common currency to stay wounded in the aftermath of the decision, the statement and President Lagarde may have to signal and highlight that inflation has already peaked, which according to the pre-discussed data doesn't seem a likely scenario. However, how the euro will perform against its US counterpart may also depend on the outcome of the FOMC decision just the day before, on Wednesday. So for the common currency to perform well against the greenback in case ECB officials sound and appear hawkish, the Fed decision may need to have a dovish flavor. A median dot for 2023 below the terminal rate projected by the market could perhaps do the trick. Now, of course, if the ECB pushes the triple hike button for a third consecutive time, the euro is likely to shoot higher without caring what the Fed has done.
Geralambos, thanks so much. This was a Forex Preview here at XM.com.